morning, everybody. How's everyone doing? It is Tuesday, March 28th, and it's still the early stages of a brand new trading week. Hopefully you had a good day yesterday. I mean, the gap rules kind of played out, I don't want to say to the T, but pretty darn well. So hopefully you caught a piece of that move. It was a very slow grind in the downward direction, at least early in the session, as there was sort of some push and pull out there with tech trying to hold up. And, at first there was quite a push out of utilities, but as soon as that evaporated, the markets kind of did what they were supposed to do there. But anyhow, brand new trading day. We're about to walk through all of the opening indications as we typically do and see what's on the docket for the session. So with that said, let's kick things off here on... Actually, you know what? I'm going to ask the chat something, and we'll see if this is a good or bad idea. Does it make sense to say good morning to folks while we're all still trickling in here? Is it too annoying to break up the flow of the stream and do it right before the ES analysis? Like right now, as folks are just coming into the room, we're kind of waiting for the numbers to pick up a little bit. It would be kind of nice to say good morning to folks now instead of, kind of waiting for later on in the stream. So like Michael, good morning. Mickey, Cy, Roger Tutt, Ryan Speed. Of course, Steve Valois is here. Macman, the original Rude Boy, Andy, Davey Daytrader, good morning. We've got May, Todd Scholes, good morning, Cipriano, Siege is in the building, Sammy Sams, Quest of All Quests, BMW, Buckminster Wallace, of course that is. David Ball is here, Jeep for Life, Shmee, Big Stick, Byron Jones, of course. Byron Jones, always grateful for your comments, super supportive. New to stock, good morning. Leroy, DP, Austin, Paul, Bob C, good morning, green name, green cash bag. Shrath, of course, Damaged Core, Neighbor, Kay, Joel, Pete and Repeat, classic name. Ketchup Kings, nice to see you. Hopefully everything's smoothing over in your world. Swipe is here, and Rando. You know, it might just make sense to say good morning to some folks earlier in the stream and not really break up the flow later on. Just a consideration, I guess it is what it is. Doesn't matter one way or another. Jay Hicks is here, Rebecca F, Lord Trader, right? Cipriano's here for the shout out only. Yeah. Works good up here. John Wilkening, appreciate the feedback. Thanks for tuning in as well. Nice to see you. Good morning. Good morning. Leon's here. Philip, don't overthink it. Yeah. I'm sure it doesn't matter as much as as much as it seems. Jay with the gold cash bag, Willowpuff, Starlight, David Ball, Dave Crompton, Raz. All right, let's continue into this. So Dead Parrot. I don't know if that's sarcasm or not. Anyhow, good morning, good evening. Hello to everybody. Let's dive into the calendar here. So, what do we see on the economic calendar? Tuesday, March 28th, 10 a.m. Consumer confidence is coming out. Manufacturing index as well, but consumer confidence will be the big one. That's what you want to focus on. It's technically flagged as a red star event. Just be prepared for a little bit of volatility at 10 a.m. What else? Wednesday, that's tomorrow, pending home sales month over month. Really not a market mover in my estimation. Maybe some volatility at 10, but really we all know that the big deal is right here, 8:30, final GDP and unemployment claims at 8:30 Thursday. And then on Friday, 8:30, the big bad core PCE. That's really something that we're going to want to watch out for, and that is something that we will be live for on the channel at 8:15. I know we've got a couple days to go until now, but mark your calendars, call the babysitter, have the wife or husband drop off the kids at daycare first. Tune into the stream Friday at 8:15. 8:15 will be live to catch the market's reaction, okay? So that's the economic calendar. Let's take a look at the stock-specific headlines this morning. Anything crazy going on over here this morning? You can see a mixed bag of stuff up here in terms of the, obviously, financial markets down a bit, but commodities and rates kind of both up. I should say energy and rates both up. So that's something interesting. Alibaba is to split into 6 units and explore different IPOs. Shares are up 9% on that news. Walgreens, right, they reported. Revenue rises despite a decline in demand for the magic solution, so to speak. Bank of England chief says that the market is testing banks to identify weaknesses. Be very, very vigilant. Yeah, nothing we didn't kind of know already. What else is going on over here? Morgan Stanley gives an upgrade in the manufacturing side of things. So think XLI, industrials, right? What else is going on here? This is not another banking crisis, analysts say. This is a sentiment contagion instead. Reasonable. This was interesting. Anybody on Twitter, you're now going to have to be verified if you want to show up in the For You tab, or the recommended feed, as they're calling it here on CNBC. So pay the $7 or basically disappear one way or another. What else is going on? Chipotle paying out a whopping $240K. That, I have to imagine that's not to every employee. There's no way it could be. There's no way. It's probably a lump sum $240 that's being dispersed amongst employees at some main location after they got, nixed for trying to unionize. What else is going on here? Upgrade to a media giant. You can see in the thumbnail, it's a pro article, but if they're being responsible, they wouldn't mislead us and put Paramount in the thumbnail. So Paramount is the upgrade there. What else do you have for stock-specific headlines? Stock-specific headlines here. Stock-specific headlines. Sienna catching an upgrade as well from Raymond James, although it is a pro article. Once again, hopefully they are not being misleading with their thumbnail here. First Citizens takeover. I was wrong. The other day I was saying, oh, First Citizens, weren't they about to blow up too? It was First Republic. First Republic, First Citizens. I mean, too many firsts here, so that's my bad. But First Republic Bank was the other one that was on the verge of implosion. First Citizens is taking over Silicon Valley Bank, and Kramer says that this won't solve the bank run problem. So if we're using our inverse logic, I guess the banking crisis is over. That's it. Done. Final. No more. Disney rolling out first of 3 layoff rounds this week, Bob Iger says in a memo. So, buckle up. Things may get bumpy. Arms, legs, everything inside the vehicle at all times. Things are going to get bumpy. Virgin Orbit extends unpaid pause as Brown deal collapses. Dynamic talks continue. What else is going on here? 4G internet is set to arrive on the moon later this year. I don't know why or how useful that is, but hey, if you or anybody you know is going to the moon, you can now bring a laptop. So congrats. That's great, I suppose. What else is going on here? Salesforce, Caterpillar, Disney in the headlines. And it's okay. Or down here, another pro article, an upgrade to a payment stock jumping more than 40%. Probably on the heels of like the downgrade and the massive slandering article about SQ Block. So anyhow, that's what we've got on the headlines. Nothing crazy here. I would say that this is pretty interesting. The Alibaba split into 6 units. Walgreens doing all right. And just of note, like the overall sentiment is that there were some decent upgrades out there. Morgan Stanley giving an upgrade, Bank of America giving an upgrade, Raymond James giving an upgrade, and Citi giving an upgrade. Right? So some pretty positive sentiment from a headlines perspective. It doesn't mean that the market has to go up, but just nice to know and have in our back pocket. Earnings calendar. After the close today, because we already got Walgreens, it's all about Lululemon and Micron. I would just primarily focus on Micron. Before the open tomorrow, Paychex may have some insight into hiring and firing. After the close, you're going to want to watch, Robinhood Restoration Hardware. RH, Restoration Hardware there. And then nothing else really catches my eye. Maybe Canoe from an EV perspective. Maybe. Okay? That's really it on the earnings calendar. We'll keep it very brief there, and we'll jump on over to our ES on the 4-hour time frame here and take a look at what's going on with our analysis. If you are just tuning in, we already did our morning shoutouts. Good mornings. We did that very first thing in the stream today, so we're going to maybe explore that format going forward to not break up the continual, what would you say? Now by bringing it up, I'm breaking it, but you get the idea, the continuity of the stream. Anyways, ES, 4-hour downtrend. Yeah, it's still technically in a 4-hour downtrend. We have highs, lower highs, and this is still technically holding as a lower high zone. We know that on the hourly chart, we have lows, higher lows, higher lows, higher lows, and we're definitely in an hourly uptrend channel right here. But for the most part, the higher time frame, like the 4-hour, the higher time frame, like the daily, it's not totally resolved the downtrend, right? This is still obviously pointing in the downward direction. Okay, the flow of the show, yes, exactly. Let's take a look at the hourly time frame chart. Now that we know the 4-hour context is, it's still bearish, but obviously sellers are losing some momentum off of those lows. If we isolate the hourly price action like this, once again, it's quite clear. No matter what side of the trade you fall on, I don't think you can really argue with the fact that this is an upward channel. I mean, if you're arguing that this is not an upward channel, then number one, potentially visit an eye doctor. And number two, if it's because there's a lack of knowledge, well, hopefully I can explain right now that, well, when you count your lows, you have a higher low, and when a higher low meets another higher low, usually something magical happens and they make, when a man meets a woman, right? Anyways, we make a higher high, and we're technically in an uptrend. So this is an upward trending channel. There's no arguing with that. If you're a bear, maybe it's a daily bear flag, right? And it's a counter trend move. But I mean, on an hourly time frame chart, if we're an intraday scalper, it would be absolutely backwards to be saying anything other than the hourly chart is in an uptrend, right? So for now, hourly uptrend. We are in the midpoint of the uptrend. Something this is worth noting, right? This is definitely worth noting, right? Yeah, John, I like that. When a low loves another higher low, we're in an uptrend. But what's worth noting here is look at all of the other interactions from in the past, right? So this anchors it. We can't really go off of that. But if we were to go off of this, it goes straight to the top of the channel. From low, straight to the top of the channel. From low, straight to the top of the channel. We just went from low, we had a nice rally, but we did not make the move all the way to the top of the channel. So is the bullish momentum, quote unquote, slowing down, just like the bearish momentum is slowing down on the 4-hour chart? Yeah, it definitely is. It doesn't mean that we can't get continuation today towards the top of the range, top of the channel, but overall, it's very obvious that these aggressive, volatile squeezes are kind of slowing down, and that was evident in the pause from yesterday's session right here. Once again, it doesn't mean that we can't squeeze in the upward direction, but as of right now, it has not been as clean as it has been in the past. Okay? So, what does that mean? Well, we're starting to really get more of a neutral feel for the market than a trending feel for the market, right? If you combine the 4-hour, which is telling us that the downtrend is slowing, but you also combine that the hourly chart here, the uptrend is slowing. Okay, I'm not going to say that these directly cancel each other out, but you can get the idea that there's now a competition between the two higher time frames. Let's move on down to before we do that, let's just point out where some upper and lower targets are coming from on today's session. We know that if for some reason there's a big break in the upward direction, this is an extremely high area of interest, right? Not high as in it's above us, but it is above us, but a lot of price interaction at this particular zone, right around that 40-30, which we've been talking about in prior streams. So that's still an area of interest on the upside. It's basically the prior high of day as well, but that's there. And if there is a break over these highs right here, you can see the next resistance is 40.65. Okay, so just pointing out where the structure is coming from before we go to the 15. And if we crack these lows, prior low of day, and really fall further into the Friday range, recall that yesterday was a gap and hold basically. We'll see that on the 15 in just a second. But if we start falling more aggressively underneath these lows, prior overnight low, prior low of day, right now it's the overnight low, right? It's a shorter term, more nuanced level. It's definitely more relevant on the 15, but you can see the top of the range is back in play here at, what were we calling this? 3950s, right? Sorry, 3970. What am I saying? 3970. 3970 has been our number, okay? So 3970 here. Those are where the two larger targets are coming from, here and here. Okay, with that all on the table, let's move on down to the 15-minute time frame chart and see what's going on from a more nuanced perspective, asking ourselves, of course, the three big questions that always guide our pre-market analysis and give us some context for the open. So, number one, where are we opening in relationship to the prior day's range? Are we opening in or out of range? Here's the high, here is the low. As of right now, we are actually opening on a gap down. Very small, but it is technically a gap down. That, of course, is bearish, but it instantly puts gap rules in play, which means that there should be something to do sooner rather than later in the market. Be prepared for early morning trade, not having to be patient and, letting something develop. What else does this mean, right? There should be some knee-jerk reaction, some shock and awe here on the open, which is important. Number two, where are we opening in relationship to the overnight range? Here's the overnight high. We are pushing into new overnight lows as I'm speaking to you. That, of course, is bearish. We're opening closer to the overnight low instead of the overnight high. However, we know that this actually sets up good risk-reward from a gap fill perspective, because there's higher odds of a bounce here. And, as I'm talking to you, you can see we're obviously bobbling around the prior low of day. We'll take a nuanced approach to the analysis in just a moment, but for now, let's just move under the assumption that it is a gap, a true gap down. The risk reward is actually more favorable for upside with a stop loss underneath the overnight low, underneath the prior low of day, looking for the rotation here, noting that we are technically in a 1 hour uptrend. It's a weakening uptrend, but we are technically in an hourly uptrend. That's something that would be noteworthy, right? So risk reward is actually favorable for longs down here, even though the implication of being on the overnight low is more bearish than bullish from a price action perspective. Okay. Question number 3, last but certainly not least, what is the position of the overnight inventory, net long, net short? To do that, you just extrapolate the settling price from the prior day's session. Same thing as saying the closing print, how much time was spent above, how much time was spent below. And you'll notice it's, maybe getting a bit more net short, obviously, as we're pushing into the opening bell and getting closer to the opening bell, I should say. But it's not 100%, right? There was some activity here that was above the closing price. So I don't know. What would we call this? Maybe like 70% net short, because again, obviously you've got to start to favor the fact that yes, as we get closer to the open, more volume starts flowing in. So let's give the benefit of the doubt and say like 75, maybe 80%. I would go with 80. I think 80 is appropriate given the volume injection here in the last bar that's been printing. So let's say 80% net short. 80%. It's not 100, but it's also not 50-50. And this, of course, informs question number 1. When there is shock and awe, the imbalance in the overnight inventory is traditionally what you want to see correct, and that's what fuels the gap fill in the first place. So the 3 questions this morning, based on our opening print being right around the prior low of day, gap rules are technically in play, but is the risk reward really worth it to close the gap and then look for a gap fill reversal? Absolutely not. There's no range to really be trading for in this general area if the gap remains this small for the opening print. So I think the 3 questions this morning really only give us the insight to say, yes, there should be something to do sooner rather than later. We don't have to be patient. We don't really have to, well, you should always be patient to some degree, but we're not looking for a balance range to develop. We're not looking for an opening range breakout. We're not looking for any of that. I think we'll learn something about this market very simply, depending on what side of the prior low of day we start accepting on. If we're underneath, then, even if we have to close the gap and then we do something like this, obviously that's bearish acceptance underneath the prior low, underneath the overnight low, underneath the prior overnight low, right? And we know that we've got thin structure off to the left to start to retrace through. In the downward direction, we're looking at 39.70. 39.70 as we just saw on the hourly time frame chart, right? So that's your downside target if we get acceptance under the prior low of day, under the overnight low, and also, right, it's just a big psychological number at 4,000. That's worth calling out, right? If we're spending time underneath that psychological number, if we're spending time underneath the structure, 39.70 could very reasonably be on the table as a downside target. If we poke into the prior day's range, you know the deal. I mean, look at this action from the prior day. Choppy in here. Maybe there's something a bit more constructive over that 4014. That was the number that we called out for the afternoon move yesterday. Recall in yesterday's stream, we talked about that 401 concept, which is if value could not get overlapping to down on the gap. As a matter of fact, let me clear this up. So take a mental snapshot of this, and I am going to clear this up and recall, right? Let's go auto here, auto zoom, and let's just grab another day or two so we have a bit more context to view the market through. But recall that the value area from the prior day was somewhere in here, right? This was basically value area. Maybe it was even lower, something like this. And the prior day's developing value, even as the gap was unfolding and closing, as we sort of talked about in the stream, value here, value here, developing value on the day could never get overlapping. It could never get overlapping to down inside the prior day's range. So 4014 was the level here that if we could break above that, that's where we're expecting that late day push. It kind of happened. It was given back into the close, literally into the close. But for the most part, 4014 could be construed as an area of interest based on the breakout taking place there yesterday. Also, you can see in the pre-market, we get tangled up around that zone. So I'm not saying it's a major level for today's session, but if we do accept inside the prior day's range, I wouldn't be thrilled about upside outcomes if we're underneath 4014 is basically what I'm getting at. And if we can crack 4014, now we have a target here at the overnight high and the value area high. I think that's probably a more respectable range to be trading for instead of being underneath and in this chop zone, underneath this area of really lack of acceptance, right? Higher, at least, lack of price acceptance above. You can see here it quickly rejected. So 40.14 might be a minor level to carry forward on today's session, okay? That's kind of that's what we're looking for on the upside. So we covered the downside. We talked about, obviously a breakdown of this structurally significant zone right here, 4,000, prior high, prior low, prior low. This is the gap fill reversal as well. Low here, we didn't violate it into the close. Overnight low, overnight low. If we get acceptance underneath, we know the deal, 39.70. If we're getting acceptance in the prior day's range, 40.14 really needs to be taken out in the upward direction to start targeting some of these upper levels. All right, if that is the case, if we do put in, let's say today is just a really boring day and it does something like this up here, what's the pattern? Right? It's a gap fill reversal that's held here and here. Now we're getting consolidation at these highs, inside bars in theory, if this just goes sideways today. And then the break in the future, whoop, we don't want settings. That's always a tricky one. Control S brings up your settings for anyone who's curious. But the setup is then a break of those highs at 40.30 to get into that next zone that we were just discussing, 40.65. 40.65 from the hourly time frame chart. So that's really how I see today unfolding. I think that we will learn something early on in today's session at this particular zone right here, 4,000. It's really the primary watch for the open. Do we accept inside the prior day's range? Do we accept underneath the prior day's range? And from there, we'll start to formulate trade plans, right? Do we get a breakdown off the open, a bounce that forms a lower high underneath the opening print? We can look to short. 39.70 is still the target. If we get like bear flag consolidation down here, a breakdown of the flag lows could also be a trade, right? Accepting in here, maybe we do have to wait for the opening range and then we take out 40.14 on the upside, right? Maybe it's just a solid push, higher low above a VWAP, upward sloping VWAP is doing this or something. Entry here, right? So it really depends. All the setups today depend on how we resolve 4,000, basically. To keep it very, very simple, in the ES, there's only one number to pay attention to, 4K, 4,000. That's it. That's it, all right? Nothing more, nothing less. You can see if we do start the breakdown, there's some structure maybe here to be mindful of. I would say you might want to watch out for like 39.85, but 39.70 is the ultimate target from the hourly structure, top of the balance range, right? Top of the balance range. Okay? That's the ES, 4,000 primary focus. Look at that. We're sitting right on the number. Right on the number. Okay? Now we're off of it. Ruined it. Jinxed it. Anyhow, what does the chat seem to think is likely for this morning's session? Let's take our infamous YouTube poll and see what the sentiment out there is from our traders. If you are a market bull today, thinking that we resolve 4,000 in the upward direction, opening range or whatever, break 40.14, higher lows above, target 40.30, inside day, moving up towards these highs, maybe even poking out up and over the top. Let's see a number one in the chat. You are a market bull. If you're a little bit more neutral, thinking that we might flush the 4,000, but then recapture higher low, attempt this, and then close, something really sloppy, but right back around 4,000. Market's kind of content here. Maybe you could imagine that the point of control stays low, right around 4,000. That would be a number two in the day in the chat. That is just basically a neutral day. Not really expecting a whole lot of the market there. And then of course the bears. Let's see a breakdown, lower high, 39.70, right? 39.70. Let's see a number three in the chat if you're a bear looking for that outcome here. Potentially further as well. I'm not saying that the market needs to go further, but it certainly can given the conditions of volatility right now and the average range that's kind of been unfolding. All right, so that's those are the three options, and the I don't know option, of course, is a number four. If you don't know what's going to take place, a four will suffice in the chat. And while we let that simmer, I'll move on over to the clickable poll, and I'll type that in, and the lurkers can participate and have their fun that way. All right, what do you think? One, bull. Two, newt. Let's add some options here. Number three is bear. Number four, ostrich. All right, clickable YouTube poll is out there in the world for anyone who wants to participate that way. Now is a great time to remind folks that if you have not hit the thumbs up button already, it's a simple way to support the channel, and that'll be kind of the last time we mention that. But what do we see? About 800 people in the chat, 200 maybe-ish likes. The number's getting cut off on my end, but regardless, quick thumbs up always helps out a ton. Thank you, I appreciate it. Anyhow, jumping into the chat. Gap rules. Again, gap rules are in play to some extent. Whenever there is a gap, technically gap rules are in play. But because we're so close to the prior low of day, I mean, we're literally off of it by, 3 ticks right now? 4 ticks if you want to call this 4,025. So we're just off of it by a couple of ticks. There's no range to trade for in here. So technically, yes, the gap could close, and the gap very likely will close because of the size of the gap. Even just a little bit of opening volatility should close that gap, but it's not something that we're actually trading for, right? It's just the resolution of the prior low of day, which we care about on this morning's session. So with that, we're into some poll results. We've got 2s and 3s early on in the chat. Wow. Everybody's bearish. Everybody and their sister is bearish here. There is not even close to any influx of 1s early on in the stream as I was going over the options here. 2s and 3s just complete and total domination in the chat. The clickable YouTube poll is sitting at 47% response rate for the bears here this morning. And as I scroll deeper and deeper through the list, I mean, it's 2s, 3s, 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 3s. There are virtually no 1s. Nobody is a market bull right now in the chat. Wow. Interesting. That's kind of interesting. I mean, you could take the counter stance and say, oh, sounds like we're going to have a green day if everybody's so bearish. I would be cautious about the short. That's what I would say. I would be very, very cautious about the short and just expecting that the market needs to move lower because of the fundamental narrative, because the pre-market's down a little bit. I would just be very, very careful of the short. So what do I mean by that? What do I mean by being careful of the short? Well, you need an added layer of confirmation, right? I would not just short this market on the open. Because if you short the market on the open, there's always the opportunity for it to sweep the lows, grab a bunch of shorts, including yourself, someone who shorted on the open, then rip over the opening print into the prior day's range. Even if we just chop around in here, it is going to test your mental strength. Let's just say let's say you're swinging a larger position. I have no idea what your trading strategy ultimately is, but let's just pretend, right? Let's just pretend that for some reason you put a stop loss up here. And you're looking for the market to go, I don't know, 39.50 on the downside or something like that. Fine, right? The risk reward technically makes sense. You're risking 1 to potentially pick up 2 on the downside. 25 points of risk, 50 points of gain, whatever. Even if the market just grinds around sideways in here, are you going to have the mental resolve to sit in that short trade just knowing that there could be a swing higher? And of course, we are technically in a 1 hour uptrend. Right, the 4-hour downtrend is losing its steam, as is the 1 hour. Let's be very fair here. It's losing its steam. Actually, that's an up arrow. It's losing its steam, but I just don't think being short directly on the open is the wise idea. I think when I say be very respectful and very mindful of short entries, it just means wait for a push away, wait to resolve this 4,000, and then scout the lower high. The lower high underneath, that's going to hold the secret. Right? If you can find this entry right here, now all of a sudden you can put a stop loss above the overnight low, above wherever this high forms, whatever structure it is, be it an inverted hammer, be it a intraday double top, not inverted, but regular head and shoulders, whatever the pattern is, whatever the structure is, this will define your stop loss, right? Then you're looking for the entry back in the downward direction, much tighter risk reward, even if you're still targeting 39.50. Now your risk reward is, instead of a 2-to-1, you're looking at, gosh, I'm not even going to do the math here, but you get the sense that this easily turns into a 5+ to 1, right? So just be mindful of the lower high entry underneath the zone as probably more favorable. Obviously, if it's up against the overnight low, that's probably, a bit optimistic. You very well could just see a flush that runs away, and then the lower high is somewhere down here, and now you've just got to reassess, is this risk worth this reward into 39.70, right? So depends on where that high forms, but that's what I mean by being respectful of the downside short trade. So if you're a bear, if you were very, very giddy to drop a number 3 in the chat today, there's nothing wrong with that. There's nothing wrong with that, but I would just be very mindful of these particular setups and needing to resolve 4,000 in the downward direction before stepping on the gas pedal for the short trade. All right, so that's that. Because once again, if this happens, you better believe that anybody who got sucked in short here with a short duration outlook, so someone who's not necessarily targeting 39.50, who has a stop over the high of day, whatever, they're going to get stopped out instantly. We go on a stop run that's sort of like a quote unquote mini short squeeze, and all of a sudden we're trading back in this range, right? So just be mindful of that if you're looking to short these lows. I'm not saying that there's zero probability of the market moving lower. I'm just saying be responsible with the entry on this particular setup, as we need to resolve the level before we really make an entry or assumption about what the market's going to do based on that level. Okay? That's all. All right, cool. We've done it. The original Rude Boy dropping a 5 in the chat for the relocation fund. I'm a little bullish, though, on the contrarian side. Yeah, I think that's reasonable, the original Rude Boy. I think it's totally reasonable to be on both sides. I was honestly, I'm very surprised that the chat leans so heavily bearish. I was expecting much more of a number 2. I was expecting much more of a number 2 from the chat, thinking that we would have half the people thinking short squeeze back into the range, half the people thinking that, yes, the world is ending and we're moving lower. I'm very, very surprised that the chat is so overwhelmingly bearish. But it is what it is. That is what it is, right? So hopefully what you've learned in this little walkthrough here, or just at least the context for this morning, is make sure that there is firm resolution of 4,000 before stepping on the gas in either direction. Okay. With that covered, let's move along and take a look at our NQ, NASDAQ 100 futures. What's going on in the NQ 4-hour time frame chart? We're going to do the same thing, and we're going to start with the higher time frames and move right along here. Overall, very, very difficult to be bearish in tech. We know that this overall is exhibiting massive relative strength. Hang on one second, guys. All right, that's better. Nice gulp of water there. Anyhow, nice bull flag being put into place on the 4-hour time frame chart after a 100% retracement of the down move, right? It does strike me as being more bullish than bearish. Obviously, we are still well above the neckline of our double bottom, our key support here at 12.6. Now, we are coming into some of these lows, and something that's interesting here is that we are just dealing with multiple inside bar setups. We are still inside the bar from, what was this? Let's move to a smaller time frame so I can actually count the days a bit easier here and not get the day wrong. So if this was Monday, this was Friday, this was Thursday, this was Wednesday. FOMC, should have known better. But the Wednesday FOMC is still the container bar. Everything from then is still an inside bar. So the market's not really doing anything all that impressive here on the NQ. It's definitely threatening, right, in the short time frames, shorter duration, something like a descending triangle. And I get it. We kind of go through the resistance trend line here. But for the most part, you're just noting, right, the main purpose of this pattern is just that we're tracking lower highs and equal lows. So if you flush these, the bears should have some sort of edge because of the implication of these lower highs. The bulls are not so strong here, right? So that's one consideration, but the other consideration, again, is that the 4-hour chart is in a glaring uptrend, right? It's got a full reversal. It's above the double bottom neckline. The hourly chart, which we're on right now, is still technically in an uptrend, even though we have this descending triangle at the top. And typically, we just call that a bullish pennant. Even if you get a descending triangle at the top, it's still a bullish pennant, and we're looking for eventually a break here. The most interesting thing about this would, of course, be a sweep of the lows and then a retracement back higher. Suck in all the shorts, just like we're talking about trapping them in the ES, right? Those who are overly aggressive on the open, then crack the trend line. Those shorts squeeze out, get us back to the top of the pattern here. Then we look for the higher high. That would be something like a 4-hour higher high, if we can poke up above, right? And then the structure remains solid, the uptrend resumes. So that's one consideration. I'm not saying it must sweep the lows and then squeeze out the shorts. I'm saying it's one consideration. In the shorter time frame, so let's go to the 15-minute chart. Now that we know kind of what we're dealing with inside bars at the top of an overall range, on the 15-minute chart, right, I think we have some differences to talk about here. In the NQ, obviously, we never really undercut this low, but, I mean, the ES relative is trading up here, still outside of the Friday range. So little divergence from that perspective. So this is still going to act as the flush point. If we don't, I should say, if we crack the prior day's low, if we crack the overnight low, you still have some semblance of support in this zone around 12.7. I don't think 12.7 will be lost all that easily. And just like we talked about needing that like layer of confirmation in the ES with the lower high underneath, on the higher time frames like the hourly chart, like the 4-hour chart, because we're still in uptrends here, again, to play this on the short side, I don't want to be entering new shorts at 12.7. This is an area of support, right? An area of demand. If you like supply and demand, if you like support and resistance, whatever you want to call it, this is an area where buyers historically have been interested. So I don't want to be a new money short literally right into this level. What do you want to be? You want to be a new money short here on the break and sort of, confirmation lower high underneath, because now you've violated that area of support on the hourly, on the 4-hour, and the next target comes into view, 12.6, right? So this is probably the more responsible short setup in the NQ, just shorting it when we get here, right? Because we are opening above. It would imply that there's been some selling. Buyers may step up. If the sellers are tired from the opening drive lower, I'm not saying it has to happen literally, the market can always do whatever it wants, right? Let me preface it like this. But the market can always do whatever it wants, but it wouldn't strike me as unreasonable if the sellers get tired at this area of demand, the buyers step back up, and then push prices in the upward direction. The ES on a relative basis is still holding up kind of right around in here, right? The pre-market is testing these areas. And if the ES remains strong, the NQ pushes back into range. There's no reason to really think, if the ES does this, right? There's no reason to really think that the market's going to hell in a handbasket. Everything's going to zero. So just considerations to be very mindful of on today's session. I think we're opening in a very tricky spot, specifically here in the NQ. I think the levels are much more clean cut in the ES with that 4,000 level. Whereas in the NQ, obviously, you've got a little bit of an opportunity for an opening drive lower, but we're into demand here. Support could see that rebound higher off of it. So I'm not in love. I'm honestly just not in love with shorts. I'm not in love with shorts on the NQ, just based on everything we've just discussed. So I think that's going to kind of wrap up the NQ analysis. We'll move along and take a look at the Russell. What's going on with the rut? Russell, let's go 4-hour chart. 4-hour chart, Russell, we know that we've got ourselves that bear flag. We did not rotate to the top of the range, so there was not really a follow-through move off of the short squeeze after sweeping the lows from in here. We are still holding up in the midpoint of the range. Folks, whenever you're in the midpoint of the range, we know this. Everybody in the chat should be saying this in unison with me, either in their head or typing it out, whatever. Your edge does not exist in the midpoint of a range. Your edge literally exists at the edges for a breakout or mean reversion, and the same is true but opposite at the bottom, mean reversion or a breakdown. So not thrilled with the Russell 4-hour chart. It's really saying, hey, neutral, right? Don't get me wrong, in the grand scheme of things, yes, bear flag consolidation remains in play. But if we take a look at the hourly chart, if we isolate the price action, right? On the day-to-day, what is this telling us in here? Once again, it's just neutral. It's in the midpoint of the range. Not really a whole bunch of edge here. Maybe the buyers still have some, semblance of like bull flag consolidation at the highs. We're holding up above the prior high from the Friday session, right? This is bullish above that high. So maybe you could look at it as consolidation here ultimately leads to a break over this midpoint high to the top of the range here at 1800. But for the opening print and the opening trade, we don't have anything too obvious here in the Russell futures. Let's move to the 15-minute time frame chart. Opening indications, neutral. We're inside the prior day's range. Here's the high, here's the low. We're inside the value area. We are sort of opening around the overnight lows, although we should rightfully adjust our overnight low. There we go. We're opening closer to the overnight low, but it's so neutral being in the midpoint of the value area here. Nothing obvious to do in the Russell. This is telling us neutrality on the open, if anything. Okay, that's that. Let's I actually think I'm being irresponsible here by not talking about the 3 questions on the NQ. We'll do that briefly, very briefly. So in the NQ, also, what's going on here? Okay, something funky's going on this morning's session. Why did I adjusted every other level but the prior low of day. What's up with that? Maybe it's because I thought the value area low was basically right on. Yeah. Anyhow, The three questions, now that I'm done losing my mind on the stream and considering where these levels should and should not be, the three questions tell us, it's still all about resolving the prior low of day in the NQ. Almost identical in terms of implications as the ES, but obviously the hourly structure is different in the NQ. So, okay, a little bit of a mind loss there, a little bit of an episode, if you will, but let's take a look at our cash ETFs. We'll keep the show moving right along. We've got 9:08 on the clock, doing fine on time, and we'll give you the cash equivalent numbers. Yeah, the prior low of day was wrong. Yeah, I don't know what's going on, man. I totally blanked on that one this morning. Anyhow, moving along to the spiders, what's going on in the SPY ETF? What's the cash equivalent of these levels? I put out a very simple chart on Twitter. It's not worth pulling up in another tab, but the idea basically was, I could do it like this actually. If I just go to a clean SPY chart, if you take a look at 396.50 down to 393.50 and put a zone through it, something that does this. This is the simplest way to visualize what you want to do on the SPY. If we're above and we're here, we're long. We're looking for continuation. This turns into an inverted head and shoulders. All right. If we're underneath, we're short, and we're targeting the lows from the banking crisis, 380-ish, 382, whatever, down here. Obviously, on today's session, we are poking down into the range where, as we described in the weekly watch list update from Sunday, I'm not incredibly certain that there's a larger edge, at least from the daily chart, from the weekly chart. There's no considerable edge in that box, right? In this box, there's not really a considerable edge. We found support here historically. We found support here historically. Resistance, whatever, right? Are we just going to chop around in there? It's reasonable to expect a difficult time in this range. Things become clear here, and things become clear here, based on the psychology and where people are positioned from a technical perspective, right? That's kind of the main point of looking at levels. Where do people have to change their mind? So being in between, you can see that here on the pre-market side on the 30-minute chart. It's not, again, I want to be very clear that we don't just surrender to the market and say, whatever, we're not going to do anything on the open. There are some indications to be paying attention to, primarily this level here at 395.75. 395.75 is your SPY level. It's the prior high, it's the overnight low, it's the prior day's low, it's the overnight low roughly. All right, so there is an inflection point here, just like there's an inflection point at 4,000 in the ES futures. But on the daily chart, like if you're expecting something massive to unfold on the daily chart, it's not going to happen in this box. It's going to happen when we get further away here or further away here. That's kind of what I'm getting at. So at the end of the day, in this box, in this zone, I think I owe Slick Messy a reply in the comments section on one of the more recent videos, but once again, it's all about me. Me on the channel. It's all about TB Matt. I want to be a narcissistic fool full of myself. It's all about me. No, I'm completely kidding. For anybody who's tuned in for more than like a week's, or for anybody who's even here yesterday, you guys know exactly what ME stands for. What does ME stand for? I want to see it in the chat. I'm not going to say it. But the chat definitely knows what it stands for. You guys are not, you should know this at this point. Yes, Sharath nails it. Right? What is this? What is this going on here with the world's only unique method developed by me? Sania Joshi. I hope you make $1 million. Anyways, manage expectations. Yes, that's what I was looking for from the chat. Very good. Right? So it's not about me. It's about managing your expectations as we're in this daily zone right here. Nothing really that impressive can take place. You can see the market chops through it. Something constructive happens here. Something constructive happens here. Again, I think that there's an opportunity for early morning trade as we resolve this level that we've just highlighted. Once again, because I know it's slightly underneath our zone here, it's 395.75. 395.75 is technically the pivot. We're pushing slightly underneath on more of a gap right now as I'm speaking to you. But 395.75, if we're underneath, I think it's reasonable to look for the bottom of this zone on the daily, which is 393.50. If we recapture it quite quickly, then once again, I think the highs are a likely target. 398 could be in play. And then we're just kind of erasing what the damage was done from the FOMC meeting. So I think it's a time to manage expectations in this box. I still think that there's a trade to unfold on the opening bell around 395.75. If you're a short, right, something like this is definitely required. The lower high underneath could be a lower high down here. Then, of course, you would have to adjust to make sure your risk reward is, reasonable. That's the point. But, that's what I've got for you on the SPY daily chart. From a cash ETF perspective, instead of 4K, right, the ES we know is 4,000 in the S&P 500. So the SPY, we want to be watching 395.75. Okay, those are the two numbers. And hopefully this was a worthwhile explanation and deep dive on the SPY daily. Okay, that's that. Manage expectations. Me. Be selfish out there, right? If that's an easy way to remember to manage expectations, be selfish out there. All right. QQQ, what's going on with the NASDAQ 100? We just talked about it in the NQ futures. Here are a bunch, wrong tool. Here are a bunch of inside bars on the daily time frame chart. Inside. Very simple here. I mean, patient traders want to get out of the box. Get us out of the box. Even if it's a short, once again, I don't think that you want to overstay your welcome on the short side in the NQ specifically, QQQ specifically, because we have a double bottom that has successfully broken over the neckline. A reasonable pullback comes into 300, finds a higher low on the daily time frame chart, and then we're back off to the races, making the equal high at 311. So I would not overstay my welcome on the short side. It's still going to boil down to the two equal lows from the Thursday and Friday session of last week. So underneath 307, that was the number we gave you in yesterday's stream as well. Number has not changed. 307 is still, the key level in the QQQ. 307 breakdown. Okay, things might get interesting for a pullback into 300. I mean, there's still 7 points of range there to be trading for. It's not nothing, right? It's not nothing. So that's the QQQ. Next up, IWM Russell 2000 and the small caps. We just covered this on the RTY futures. Overall, higher time frame bear flag. Yes, absolutely. Intraday, right, we are getting acceptance above the gap high, above this high, right? You can see that here on the daily time frame chart. So the more time we spend in the range, the more time the shorts here have to consider, okay, am I going to panic out of the position, rotate us to the top of the range as we close out, right? Added buying pressure. It's a consideration. 176.75 is still the key number in the IWM. All right, IWM 176.75. All right, we've covered the broad market. We've been pretty thorough on that analysis. Let's move along and take a look at Apple and see what's going on in the core list of companies. Apple is almost, I don't want to say a direct one-to-one mirror of the QQQ, but I mean pretty darn close. Here's your range, right? We're above the range in Apple, but we are forming a whole slew of inside bars. So the setup, again, is quite simple. Watching for a breakdown of this level, and oh, lo and behold, in the pre-market, we are actually underneath the level at 158.25. 158.25 was the breakdown point. So, I mean, it's very, very simple now. You're just looking for any rallies to be met with resistance for a lower high underneath this zone. You do not want to be long Apple on this breakdown of the inside bar range. You want to be looking for shorts against the bottom of the range. So shorts up against that, looking for continuation. Or what's the other trade in Apple? If we just fall straight off of a cliff first, you probably don't want to be short Apple. You want to be looking for longs in Apple off of 156.50, top of the range, right? Break, retest, rally. That's a little bit deeper than I wanted, but 156.50. So Apple has two very clear setups. You want to wait on the open. Do we rally and close the gap first, looking for weakness here, roll over shorts into 156.50, or weakness on the open, difficult to catch because we don't have good risk reward. You can't put a stop up here, enter here, and target here. You're dealing with a one-to-one. You will lose in the market if you take too many one-to-ones. You will be a loser, and I don't want you to be a loser. So can't do that. So instead, we're patient and saying, okay, if we find demand down here, that would make sense from the daily pattern, break, retest, rally. All right, bull flag stays in play. Top of the flag is the target. Okay, that's Apple. Next up, Netflix. What's going on with Netflix? Taking a look at Netflix, finally finding a bit of well, I shouldn't say finally, but reasonably finding a bit of resistance here at the daily 50 SMA at prior structure. So after this ripper of a rally, which again completely caught me off guard considering the relative weakness, we know that this was on some sort of news, whatever. The trade here is very, very obvious. Very, very obvious. And because it's so obvious, maybe that means that it fakes a bunch of people out, but I would just be watching for a breakdown of the prior low of day, prior congestion lows from here. We rotate through the thin structure. We get a pullback on the daily time frame chart. We target the neckline for a break and retest. And then, ultimately, if you're a market bull, You want to see Netflix do something like this in reverse off the retest of the neckline. But to get there, this setup should strike you. Setup should strike all at the same time. Shut up, apparently. This setup should strike you as very, very obvious, right? Big failure from the buyers to hold prices above 332. All of it is given back, and we consolidate weak at the lows. Pre-market session is going sideways just above these lows. It's consolidation lows from here. A crack of that, very likely moves us in the downward direction. So Netflix is a top short watch. If the market's, going sideways or threatening downside, I would want to be looking at Netflix for downside, okay? Top watch. Next up, Tesla. What's going on with Tessie? Balance range in play. A micro balance inside of the larger balance. We're opening inside the prior day's range. So this is a patience play, right? Now that we're sort of confirming that, yes, we're kind of holding up above the lows of the balance from in here, above 188.50. It's a patience play. You could play ping pong in the range. That's fine. You do your thing. But long's better over 200. Although it is the midpoint of the range, it's breaking this range, right? So that's noteworthy. Target top of the range here. If we crack underneath, 173. So opening here is not giving us a lot of insight. I think Tesla's a patience play, a sit on hands play, wait for more information. Netflix, pretty strong this morning in terms of rank ordering a setup, right? It's a strong downside watch. Google, big breakdown of this support 103.75 yesterday. Honestly, was kind of, we know that we had thin structure off to the left. We know we were hanging out at the highs, but nothing about the pre-market indications yesterday really suggested, big, massive failure there. So, and especially after the first 30-minute, gravestone hammer doji. I shouldn't call that a gravestone. It's the opposite, but dragonfly doji. There we go. Regardless, it's now underneath the level, and I think that we can continue to expect pullbacks into about $100. That would make sense structurally that $100 could be back in play, also psychologically. So watching for continued downside in Google. It could be something like a rally first to short into that, or a drive lower. Hopefully there's some sort of pattern on like a 5-minute chart that's granular enough to catch an entry on like a bear flag or something. All right, we've got 9:20 on the clock, so I'm going to speed it up just a little bit here. Anything interesting in Meta? Not really. Meta, we wanted to watch for breaks over 207. Nothing really interesting happening here. Tough to play this as a short. I mean, I suppose technically, spending time underneath this low gets interesting for a full pullback to 195.50, but this is not. I would prefer to be a short in Netflix. Obviously, I think that the setups speak for themselves there. So Meta's kind of a back burner idea. Nvidia just still so strong as some of these other tech names have pulled back. It's hanging in there sideways at the highs. Doesn't mean that you want to be a new money long up here. It's still not the argument. This is a patience play. I suppose there could be a breakdown of 262 to get through some of this thin structure. But again, do you want to be short Nvidia, the strongest name out there right now? Again, Netflix looks attractive, right? I keep coming back to Netflix. Maybe it's a complete fake out because it's such an obvious setup, but I think that the risk-reward parameters probably make the most sense there. If you take a look at Microsoft, inside bars on the daily time frame, so very, very simple. Just watching for the reaction here at 275.50. We're opening right on it, breaking down underneath. Fair play into 270.25 on the downside. If we get something that does this, look below and fail. I mean, you get all this congestion here. I'm not thrilled about longing back up to the top of this. I think what this would do, right? A look below and fail on this particular daily pattern, so a break and then recapture, it sets up a higher confidence break over the top of the range here. It's not so much about the trade to the back to the top of the range on the recapture, right? This would just be an indication that nobody wants to be short Microsoft, and then we look for the break over the top. That's a stronger move to watch for in Microsoft, okay? Next up, Amazon, last but not least, the mini beast. Then we're out of here, still sideways in the range. Nothing really pertinent on the open. I think, guys, the core list of companies did not offer up a ton of setups this morning. The primary one to watch is Netflix. We talked about why this is such an obvious one right here. But other than that, I would just be a watcher of the ES. I mean, for the most part, ES is likely going to drive direction across some of our other components. So figuring out how this resolves is probably the key to today's session. So if you're only going to watch one thing, I would tell you watch ES at 4,000. How does it resolve it? And that's going to be your driver for whether or not Netflix breakdown is on the table as a strong play. Or if we're going in the opposite direction and this recaptures, maybe you want to take it with smaller size because you're countering the direction of the broad market. I mean, the setup there is still so weak that I think, it's worth looking at, but you get the idea, right? So that's what I'll leave you with on today's session. That's the insight for today, is use one key to ultimately guide the decisions in the rest of your trading process, and I think that will serve you well. Okay, that is going to wrap it up for today's session. Thank you to everybody who tuned in. Appreciate you being here. Hopefully you learned something new. Remember to manage expectations on our SPY daily range as well. So just as one last final reminder, I suppose, in between this zone right here, manage expectations. We're opening in it. We are technically underneath that point, 4,000 ES, 395.75 S&P SPY. All right, cool. Thanks for tuning in. Join us in the Discord. If you're not in there already, here's a link that you can type into your URL, or if you want to click on something, you can go into the description of this video and click on the link that says Discord. It is just a redirect link. It is not some catch-22 gotcha giving your credit card information. Nope, it's just a redirect, okay? So join us in there. We'll be sending out some thoughts throughout the day. Nice to see everybody. The Sandman's here. Byron Jones, have a great day. Rebecca F., have a great day. Black Diamond, have a great one. Paul, Stevie J, Mariah, Chowman, Starlight, Sharon J. Hope everybody has a wonderful trading day. Stay green out there, everybody. I will see you in the next one.